start today on time so that we can finish on time. Okay, as you all know, we had a lovely week last week. We had a very good trading, and it's nice when everything comes together and falls into place and the confidence that we get in our trades and the patience we allow ourselves to be while we are in a trade is simply because we know what each price point means. We can identify it, we can realize what this point is, the value of the point, how important it is. Is it a structural point? Is it a significant point? And the more we are able to identify these points in a timely fashion, the better it is we are. And the more confidence we have in our trades and the patience we can allow ourselves either to stay with the trade for a longer time or to exit at an earlier. So, having said that, to start our with the indices as we always do, this is the dollar index from last week, and as you recall, says there has been too many lines on the chart now, but in any case, this is the weekly chart, and this was what it looked at last week, and it was below that structure point, which is the 81. I mean, we got like 3 different structure points pretty much at this area, but in any case, that was the break last week. We were keeping an eye at the 80.03. We did break the 80.03, and we ended the week at 78.98. This, the 79.18, this is a new structural point I just added this afternoon, and it goes back actually quite some time back. And we did break, sorry, the line that I added today was the 78.30. This is the new structural point. This is the next target where the prices should reach. And we're looking now, this is a very weak situation. We know the events that took place with Ben Bernanke, basically the QE3 that has been announced, and it is quite an open-ended. The problem with that QVC, not QVC, with the QE3, it is pretty much open-ended. There is no quantity, there is no amount that is identified or assigned to it, and it is not coming out of the federal government's budget. So it is not particularly counted towards the, let's say, the government's deficit. It is actually financed from the Federal Reserve owned budget. And that's the scary part. And that could reach to several $1 trillion. And that's basically more printing money. And it definitely would have a negative effect to the price of the dollar, not to the economy. I'm just talking as regards to the price of the dollar. That printing that's coming is going to add to the weakness, and we now have pretty much a continuation of the original bear market in the US dollar, and the next target we have to look at is the 78.30, and a break below that, it will take us back towards the 76.98 or to the 77. This is pretty massive moves, and we should be looking for more, for a continuation to the downside. So we will leave the dollar in our analysis as very negative. Okay, the other currency that we're going to look at, or the two of them that we have chosen to go long as of last week, was the euro and the Swiss. And looking at the euro dollar, which is now the currency du jour, you can see that we really had a pretty quite explosive move to the upside. That is the weekly index. We have reached the high of the week on Friday at 131.79. That's based on the index, and we do have a structural point here, which is the 131.91. We just did not touch it, and we closed at 131.28. This is a normal close. It is not a close that would, it's not a distressed close, and that is a close that would indicate the possibility of a continuation to the upside. This short covering rally is still intact, and it seems to me that there is, based on what we see here in the chart, is there is more to come. If you look at the daily chart for the euro index, at the minimum, the next minimum target, or the next minimum level that we could reach, is this minor structure point. And the reason I chose this point is because it is the first pullback in the momentum move. So this here becomes a significant point, a point of significance, in addition to being a significant point, and that is 134.18. And if you look, once I identified this point as the beginning of the final push to the upside in the euro, you would see that it also has become the highs that we reached at or around the March the 29th of this year. So this is a pretty significant point, and I'm just going to highlight them so we know. And if we come and trade above the 131.91, which is like 50 pips away, that is pretty much the next target that we should get to. So we will leave the euro. It is not as a strong currency because we are in the short covering, and we should stay with it. So the dollar is very weak, the euro, okay, the dollar is very weak, the euro is strong because we're looking for the continuation. The next one I'm going to look at is basically the Swiss, because the Swiss moves pretty much one-to-one with the euro because they are tied up, they are linked. And if we go to the chart now of the Swiss franc, you could see that it has pretty much, again, it is having the same short covering rally, taking above the 104, which was the structural point, which is the 104.67, and that is a pretty significant move. That's about 400 basis points from the 104.67. We have a normal close that is a technically strong close, and that would indicate continuation to the upside. If you look at the daily chart for the Swiss, I'm going to use this structure point over here, which is the 1077, 1068. So I'll take the 1068, taking the lower of both, and we have closed above that structural point. That is an indication that that short covering should continue, and that is supportive to the euro dollar. So between this and what we've seen in the euro chart, that is an indication that the euro movement or the short covering move in the euro should continue to the upside. And of course, our sell signal is going to be easy in the Swiss franc, a trade below the 107.68. So going back to the chart of the dollar so that we can plot our hierarchy. So the dollar is basically one of the currencies we're looking to sell. We're looking to be buyers of the euro, and we're looking at being buyers of the Swiss franc. The next currency that was strong from last week was the Canadian dollar and the Australian dollar. So let's start first with the Canadian. And as you can see, last week we traded above the 101.55, and that continued higher, and we closed this week at 102.85. That is still a sign of strength, even though we had a slide, if you will. We're easing off from the high, but we don't have any sell signal right now in the Canadian, and that is a buy. So the Canadian is a buy. Just going to take a look at the daily chart. Now, the reason I'm showing you here in this case the daily chart is that it tells a different story. It just explains some weakness that has appeared on Friday, and as you can see on the CAD index, that this Friday, the way it traded, the Canadian traded on Friday does not give us the same level of confidence as we have in the euro or as what we have in the Swiss. This on a daily basis, that is a sell signal, and let me put it this way, it is a neutral day. Why? Because we have a sell signal from the highs, and we also have a buy signal from the lows, and which is this over here. So trading below the 102.71, that would have triggered further liquidation coming into the CAD, but coming back to close above the 102.85, then this means we have to be neutral for the CAD. Our sell signal is easy now for the Canadian, right below the 102.71. Right now we should be kind of neutral to the CAD to slightly positive, because the trend is still to the upside. We're looking for continuation to the upside, but that here will just give us a sense of let's be kind of neutral, positive to neutral. So the CAD, we're going to be positive to neutral the Canadian dollar. So this is my US dollar. The CAD will come here to be positive, or we're gonna be neutral on it. So we're going to pair it with the weak currencies or vice versa. And the next one we're going to look at is the Australian dollar. And of course the Aussie, as you know, actually flew. Last week we had the sell-off initially coming below the 103.89 and then the 103.28. Then it flew back and it came above the high. We do have a structural point here, which is the 104.94 based upon the index. and we also have the 105.66 on the index. Now this here on this index is doesn't let's say it's a warning. It's not the kind of close that I would have liked to see with a currency that have such a strong trend to the upside. This is pretty massive. I mean, this is technically a pretty massive setup, and technically this thing should break higher and take us to new highs. I mean, technically speaking, I mean, this is a monthly chart that I'm putting in front of you now, and as you can see that the highest level we have reached was in July 2011, which is the 105.22, and then we made the second attempt, and this was the highest high that we have ever reached, the 105.66, and then last month or so, the high of last month was 104.94, and this is where we are at today. We went above the high that we put this month, which is 105.37, which is the second highest high in history. That was the highest high that we had, which is the 105.66. This was 105.37, so we're only 25 pips from the all-time high, and then we sold off. Not sold off, it's just a normal close, but the concerning thing is it closed below this high, which is the 104.94. Well, if you look at the daily now, you can see the close, how it looks like, and that could be the beginning of a turtle soup setup, because that is the breakout, the initiation rule, the breakout, and that could be a turtle soup setup that would imply a further liquidation to the downside. And if you look at the daily chart, how many sell signals do we have? You guys, how many sell signals do we have? Right, we have 2 sell signals. That one coming below the 104.94, that is one, and the second one closing below the previous daily high, which is the 104.82. So right now we have 2 sell signals. So the bias right now for the Aussie would be, again, this is very strong. Let's not fool ourselves. This is a very strong currency, but having a push to the downside could be a liquidation. So we're not going to jump in on the buy unless it takes out this high. But if it keeps on taking this, we're looking that this will be a turtle soup and it will get into some liquidation. So with that, the Aussie, we will be looking at the Aussie as negative neutral with a negative bias. So we are also new. I mean, if you look at the Canadian, we are neutral on the Canadian but with a positive bias. In the Aussie, we are neutral on the Aussie but with a negative bias, because now we have 2 sell signals that are triggered on the chart. Okay. The next one is the yen, which was a strong pair from last week, and as you can see here, This is a major sell signal. This is a major sell signal on the yen. Having it to come back way below all these points. I mean, you can see all the sell signals coming down, being triggered all the way down. So we should be looking for a continuation to the downside, and we do have, as I said, the yen is pretty weak. Again, the trend is to the upside, the currency is fundamentally strong, but we may have now some liquidation, or that could be a sign, maybe, I don't know, maybe the BOJ is not happy with what they see now and they want to push it lower. So we're looking at the Japanese yen to be a short. So it's going to be one sell for the JPY. Okay. And then last but not least is our dear British pound. We were neutral to positive from last week to the British pound. It has been pushing higher, and as you know, this is the pattern that it has been existing all the while through. As of this moment, now we get to the point, is this thing going to break to the upside, or this is as far as it goes? Now, the key now is to look here at a trend changing pattern to identify where the structural point is, so that this market is going to change, have a trend change to the upside. And this right there, this is our structural point. And that is the 162.63. And a trade above that 162.63, if it's a structural point, I would always put a rectangle at it like this, so that we know that this is something we identified as a structural point. Now, we did not trade above it. The high that we put was 162.50, and we closed at 162.16. This is a pretty decent close. It's a pretty strong close, and it should look for us, for the pound actually to continue higher. So we will be positive to the pound, and we are going to keep an eye on the 162.63. If we do come and trade above it, and probably with what's happening with the dollar, it should, then we have a structural failure or a trend change for the pound to the upside. Okay, so to wrap up our analysis, the pound is going to be, this is how the pound is going right now, is going to be positive. We're looking, having a positive bias to the British pound, and the way then we should be playing this, we are going to be looking at selling the dollar, being short the dollar. We can go euro dollar, go long the euro dollar. We can go short the dollar Swiss. We can look at going short the dollar CAD, and we're going to keep an eye on the Aussie if it breaks below this. So, but technically we can be aware of the euro Aussie. Now we can take the euro on the long side. We can go long the euro yen. We can go long the euro Aussie. We can go long the euro CAD. These are all positive pairs to be taken to the long side, and we can Yeah, keep an eye on the euro pound if you wanted, because the euro is in this case is a little bit stronger than you can also look at the pound Aussie, pound CAD, pound yen, and in this case the pound is strong. In this case the pound is strong, but the Swiss is stronger. So if you want to deal with the pound Swiss, you want to be short the pound Swiss, because the Swiss is stronger than the pound. Okay, so the plan again, we're going to be shorting the dollar across the board, and we're going to be going long the euro Aussie, euro CAD, euro yen. We can go long the pound Aussie, pound CAD, pound yen. We can go long the euro pound, short the pound Swiss, and again we're keeping the dollar all the way short. Okay, so that is about it. Let me save the recording, and if anybody has any question, let me know.